but usually they would pick the wrong champion because they would all vote on it. Well, that's what happens when you try to assess the value of an asset without actually having a trade. When you have no trade, you have to use some other measure. You use comparable assets, like in real estate, they use comps, or you have to make some sort of guess based on fundamental valuations. But you really don't know for sure until that thing gets sold. Then when it gets sold, then you say, okay, the price went up, the value went up because the price that it was sold for went up. Everything else is a guess. Everything else is an estimate. And also, the buyers and the sellers, they never meet each other. And what I really want you to do is to understand you can be both. You can be the buyer or you can be the seller. You can receive the premium or you can pay the premium. And in both cases, both solutions can be beneficial depending on what you're trying to do. You know, if I'm trying to make an investment, I want to pay the premium. If I want to receive income, I will sell the premium, or I will sell the asset and get the premium as a replacement for that. All right, so variables that impact an option premium typically are the price of the stock. As the stock price moves, options prices move. So the stock wiggles and moves, the options wiggle and move with it. Every option has a different relationship with the stock. So you can think of it like a mom that has 300 kids, and every time mom moves, every time mama says something or does something, all the kids react. Some kids follow their mother really closely. Some kids are far away from mama, but they move a little bit. Some of them move quite a lot, right? When their mother moves, some of them move, don't move hardly at all, right? So some of them go to the left when their mother moves. Some of them go to the right. So ultimately, every option reacts to the stock price. The stock price is the core. It's almost like the sun, the way the planets revolve around the sun, but they're all in different orbits. So the stock price is like the sun, and all the options revolve around that stock price. And that's really important to understand. That's why they call options derivatives. Has anybody ever heard them called derivatives before? Anybody heard that term before? How many of you have ever heard that term used? I'm curious to know how many of you heard that term. Yeah, they're called derivatives because their value is derived from the value of another asset. So options themselves have their own prices, but they are derivatives of the core asset. So without the stock, there are no options. The options are a secondary market that's built around movement of the stock. And this is the beauty of finance, is that you can create markets for assets, and the creation of markets typically is a very good thing. um, Even things that you don't think is a market, they're markets. uh, OnlyFans came along and created a market for you know what, and it became a multi-billion-dollar thing. Uber created a market for people that have cars that or sorry, they have time and that they want to use to drive people around, and people that need a ride and don't mind paying for it. Airbnb created a market by bringing together people with spare bedrooms or an empty house for people that are looking for a place to stay. So the creation of markets tends to build wealth. It adds value. That's why bringing people together is a form of wealth. That this is economic theory. So the more you, that's why, in fact, in the Black Business School, we bring people together for the convention, and business happens. People meet each other. They start making money together, right? So wealth gets created when you bring people together because what you're effectively doing is you're creating a market. Okay. All right. So time to expiration is really important for options. Time is everything in the world of options. Time is everything really in the world of investing. Time is just so important. I was just talking to Constance Carter, who's a real estate expert that's in the Black Business School, and we were talking about how it's just fascinating that you buy real estate and you just sit there and you let time pass and you make money just because time passed. That's a beautiful thing, and you really want to be a part of that, right?